In terms of the commodity story, right, which is what I care about principally because commodities are the major cost of mining. I mean, China's obviously the center, right? It buys incredible percentages. I don't know these, half of the copper, 46%, whatever, the zinc. And all. Now they export some of that, about a third of it, but there's a huge demand for China to build ghost cities and more ring roads that will be used in the future. And again, you look back at the 1850s in the United States, they were all building railroads prospectively into the Northwest because one day someone will live there. And that happened one day, but in the meantime, they all went bankrupt, of course, because they didn't need 3 railroads going into the wilderness. So that's not going to work. And when countries put all the resources into building pyramids, which is what those are essentially, and they have yet no revenue from a pyramid, you get no revenue from a ghost city, eventually the system breaks down. I don't care how much money the Bank of China is going to print. The reality that your real resources are trapped in these assets that don't produce anything. So I think for the commodity story, the Chinese market is key. Especially a lot of the stuff. Again, it's all the bank system is borrowing short and lending long, and you look at these wealth management products that turn over every year, and they lend out to these long-term assets. So you know what's happening. You know it's going to blow up. Is it the trigger? That's a harder question. I mean, the trigger could be a pension fund in the U.S. There's so many that are bankrupt. It could be a European bank. It could be Deutsche Bank. It could be Italy. It could be any number of things. It could be commodity projects in Latin America that people have invested in on the China story, right? And the overcapacity that brings in. Who invested those $3 billion in some iron ore mine that no longer pays for it? And the thing to keep in mind on the commodity side of things especially is that if you invest $1 billion or $3 billion in an enriched oil platform, that is a huge amount of capital. The per barrel cost, running cost, might not be that much. The OPEX can be very low. And so oil can go down a long way, and they keep producing because the assets still cash flowing, but it can no longer support the assets that were used to build it. And so the lender goes bankrupt even though this thing doesn't shut off. And so prices don't recover because it's still merrily doing its thing, right? And that's true for all commodity projects. Usually the big cost is the capital cost, and the marginal cost is usually quite low. Yeah. And this can cause real havoc in the banking system or pensions that bought or whoever bought this stuff. Subprime autos, same thing. You've got a sharply falling collateral base with a rising loan balance on it. And who buys it? Pension funds. I mean, it's absolutely crazy. Yeah. So when the private pension funds go down, politicians don't care that much. When state pension funds start going down and politicians actually start getting affected themselves, I suspect it might be a different story.